What's up, guys? It's Felipe from the Noob Trader. And in today's videos, what we're going to be discussing is the CPI report that's coming out, how this potentially may affect gold price, and the different things that we should be looking out for, especially when trading gold today and just, um, waiting for this big CPI report to come out. Obviously, if you guys have been following the gold market at all, uh, inflation is probably the number one narrative that has been pushing gold price up and down, as well as just forex markets in general, right? The U.S. inflation issue and also the potential of interest rate hikes. So it's a very, very interesting time right now in the gold market, and we need to have really strong fundamental understanding of what's going on in terms of this economic data so that we can make the right decisions when opening certain positions when trading gold. So let's get into it. Okay, so I think the first thing that we want to really talk about before we get into the actual CPI report itself is just where we currently are with gold price. Okay, um, right now we're looking on the day chart here, and as we've talked about for a while on this channel, from a technical standpoint, we're forming a really, really, really nice price wedge here. Okay, and price is really coiling, kind of coincide. This price coil is really coinciding with this potential interest rate hike, right? I think like the market is really, really kind of getting more and more hesitant, and this is just showing this kind of like, this people are selling lower but also buying higher because I think the market's very, very undecided at the moment, and people are really waiting to see what is going to happen in March, which is the date or the month that the Fed and Jerome Powell have really, really expressed that they're going to be raising interest rates, even if it's by 0.25%, okay, which is a very, very small rate hike, but it's the first rate hike in quite some time. Okay, so I think that's what we're really seeing here. But at the moment, we're still in February, right? So I think people are still very undecided and very unsure what's going on, and hence we're having this price wedge here. We have to understand that we're certainly on the higher end of this price wedge at the moment, okay? So we do have to take that in consideration when we're talking about, okay, should we potentially be longing or shorting gold from this position here? We have to understand that we're on the higher end for gold price at the moment, just given general price action. So regardless of what happens in the CPI report later today, we do have to understand that if you're going to take a long at this position here, you're really, really going against the longer term trends at the moment. Okay. Also from a fundamental standpoint, and when considering that rates should be hiking in March, that's when we should be seeing a larger move in the market, I feel. But up to that point, the chances of a fundamental breakout or breakdown out of this wedge, I think, are relatively slim. I mean, just look at, again, price action overall. At the same time, from a technical standpoint, when we're looking at the dollar chart or the DXY here, we've definitely had a pullback again. And but at the same time, we're still setting these kind of higher lows here. And obviously this inflation talk and the interest rate hike talk is just overall pretty positive for the dollar, right? From a much, much more longer term fundamental standpoint. So we do have to understand what's going on here. Okay, we do have to we do have to respect the fact that if we're going to be trading gold over the coming days, regardless of the CPI report, we're on probably the higher end of gold price at the moment, and also the lower end of the DXY or the dollar, okay? We do have to understand that when we then want to start analyzing potential moves later today or early next week as well after the CPI report comes out. And finally, last but not least, we've seems to have really broken out of this 1.8% level on the 10-year yields chart, and it potentially looks like with the CPI report later today that we may be actually get a breakout here past 2%. As we know, or as I've discussed for a long time on this channel, there is certainly a correlation between rising 10-year yields and gold price, an inverse correlation, right? So if yields shoots up, then often it can cause gold price to pull back. I've discussed the economic reasons as to why this is the case. I won't go into this again, but it's something that we need to really, really be aware about. Okay, so now that we have a general understanding of where we currently are in terms of price and technicals in the market, let's start going into the CPI report that's coming out today. Again, comes out, I believe, at 7:30 or 8:30, whatever the time is in New York in the morning, 8:30 p.m. for me here in Thailand. Um, And if we start looking at the forecast today, obviously inflation's at, at a very high rate at the moment, a rate that we haven't seen in many years. And I think we need to, I think the real key question that we need to be asking ourselves as gold traders when we start looking at the CPI report potential later today, right? We can see the forecast, core CPI forecasting 0.5%. The forecast on the year-on-year CPI is 7.3%. I think the real key question here is, or that we need to ask ourselves is, um, at what at what data release, like at what data point is it going to really cause the market to really shake up? Because what we saw last time in the last CPI report, where we basically met forecast on the overall CPI year on year and on the CPI, the core CPI month to month, what we really saw is that not too much really came as a result of the CPI report, because at that point in time back in January, right? Or sorry, uh, back in January, I think especially the gold market, for example, had already long digested the fact, right, that inflation was through the fucking roof. Like this was like, there was no discussion anymore about transitory. There was no more discussion about like, oh, this is just a short-term thing due to COVID. No, I think people have now fully digested the fact that inflation is here and it's not fucking going away. And the Fed and Powell have also admitted this at this point, right? So there was really like the fact that inflation still met forecasts and just showed that inflation is still really, really fucking high. It didn't really move markets too much, right? Especially on the longer term timeframes. Of course, you always have the initial short term volatility, but it didn't really move markets too much just because people were now much more anticipating the potential of an interest rate hike. Okay. They weren't really waiting for data to prove that inflation was really, really high. That was, last year's news, right? That's no longer really the case anymore. Okay, so I fully expect that, for example, if later today we meet forecasts, right, 7.3%, 0.5% on the core CPI month to month, if we meet forecasts, I don't really expect too much to happen again. Okay, in terms of price, I still think that the market's fully digested this. Yes, there should be a rate hike next month, um, but if we meet forecasts and if it just shows that yeah we're on the same trajectory as before, where inflation is rising at this kind of steady rate, um, I mean it's not going to change people's perspectives on the market, right? The narrative is still going to be inflation is high, as shown by the CPI report, which met forecasts, and therefore we're going to get this interest rate hike in March, like Powell has been announcing now for months, right? So that's not really, really going to change anything. Again, so the key question really is, well, if we super hit over the forecast, right? Like let's say instead of 0.5%, it's actually 0.9% on the core CPI. Let's just say something crazy happens where this forecast gets overshot and now it's like 8%. Is that really, is that is that kind of overshoot really going to cause then the market to really freak out? I'm not sure. I think that's something that we'd have to really consider. My feeling is that if we really got something crazy like that, like a 0.7% increase over the forecast, uh, yeah, maybe the market's going to get a bit more concerned that Powell is going to increase the interest rates by more significantly than 0.25%. This is the thinking. I'm not saying that he's going to do that. I'm just saying this is the thinking of investors. Maybe people will start thinking this, and therefore gold, prices, things could really start selling off again, right? Like, oh my God, inflation is just so incredibly high now. He's definitely going to do something crazy in March, and markets could really, really pull back. I could see that happening, but again, first of all, I just find it very unlikely at this point that forecasts are going to be overshot by that crazy of amount. I mean, just look at the last few CPI reports. We've really been kind of hitting the nail on the head, right? The times in the past, year or so when we've, really overshot is when, again, this transitory inflation narrative was going on. People were kind of expecting the inflation to pull back, and it just kept on not pulling back, right? And that's what really caused the market to freak out. So I find that highly likely. The chances of, one thing I also want to mention, the chances of us missing the forecast, and actually inflation going down, I find very, 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 very slim. I mean, just look at previous history right now, the last months. This hasn't happened in literally months. So I wouldn't expect that to happen. Don't be dumb. Okay, that's if you're betting on that to happen, you're just your risk to rewards are just not there, right? You're not taking the right approach when analyzing the gold market. Okay, so given all of this, what does this really mean, or what do I therefore think is going to happen with gold price? Yeah, I just really still think that the market's just waiting for March at this point. I don't think the CPI report is going to come out with data that's going to cause us to like crazily break out of the price wedge that we've been talking about here. I still think that gold's on the higher end, and from a risk to reward standpoint, even if initially gold pushes up to the higher end here with, let's say, a CPI report that meets forecast or overshoots the forecast by 0.1, 0.2, 0.3%, and we're getting gold price back towards 1850. I really think there's some potential there for a short position just from risk to reward. Obviously set the stop loss at a place which is above this price wedge where you also won't get wicked out. Obviously do this all with um, with risk to reward in mind, but I do think that there's an opportunity there. Alternatively, if we do overshoot like heavily, let's say like, we get like 7.9% or 8% and the market freaks out and we get a big turn to the downside, right, in gold price, I still think I'm still of the belief then that at least for the next few weeks, any price below 1800 is a good price for gold, because I think sooner or later, even if there's an initial shock to the market where we really overshoot this in the CPI report data, that the market will eventually realize like, hey, this doesn't actually change anything. Rates are still going to be hiked in March, and chances are is that Powell's going to still stick to the same fucking rate hike that he was planning all along. What do we know about Powell at this point? He tells you what he's going to do months before, and then he just sticks to it. He actually fucking, he does it. He does this in a very slow and steady and methodical way to not freak out markets. Okay, that's what he's that's what he does. Okay, so I think people will eventually come to that realization if we do see a strong pullback um, in gold price as a result of a bad CPI report. And then again, anything below 1800, I do think when trading the day chart is definitely an interesting price to open a buy position. Okay. Anyway, guys, I've rambled enough for today. If you have any questions, please leave a comment below. If you like the analysis, please consider giving a thumbs up, and I will see you in the next video. Take care, guys.